let's understand treatment of some peculiar items. Okay, so it is not just we have to understand that what are the cash flows from investing, operating, or financing activity. There are some extraordinary or peculiar items which are there in the cash flow statement. To understand them is very important, of which one of them is your extraordinary. So extraordinary, when you like have heard the word somewhere, like you outperform your task, you score some good marks in the exam. Those are something extraordinary for the purpose of company also. Okay, what are the extraordinary item which are not regular phenomena, right? Like loss due to theft, earthquake, flood. It is a natural calamity, right? Will it happen on daily basis, or can you predict that it will happen? Theft, can you predict? Or also you can say loss by fire. Although you have taken the insurance, but fire can happen anytime. So these are some of the extraordinary items. So those are nothing but a non-recurring. As told, it will not happen in a regular interval, a repetitive basis. Okay. So whatever there are cash flows relating to this extraordinary item has to be classified, okay, and disclosed separately, arising from investing, operating, or financing activity. Okay, what I said, these items are of non-recurring nature, means they won't get repeat every time. You can't have any certainty that this will happen only. Okay, so if you have any kind of cash flows, we have to separately classify and disclose them as investing, operating, and financing activity, which we will understand in much better way when you solve the question in form of sum. Okay, and this can be help the or enable the user to understand what is the nature, the effects on present or future cash flows. Because see, you won't know what will happen in future, right? So it will, this extraordinary items which help you to enable the users what, to know the effect in present as well as the future cash flows of the enterprises. Then your second kind of peculiar item is your interest and dividend. When you pay the interest, right? When you pay the interest, you pay the interest when you take loan from banks. When you issue the shares, then you are required to pay dividend. Okay, and when you receive the interest, like told you in the investing activity, when you invest in long term in form of shares, debentures, and when you receive the dividend, when you invest in shares of the other enterprises. Okay, so if it is a financial enterprises, so what is the financial enterprises? Your bank, okay, or any other enterprises who are here to provide you loans, your chit fund, any kind of enterprises. So whose main activity is giving the loan, borrowings, lendings, okay? They charge you interest, you require to pay the interest. They receive the interest and they also receive dividend. For them, if they get any of this, like interest paid, interest received, dividend received, or lending and borrowing, it is their operating activity. When dividends are paid, it will be treated as financing activity. Okay, let it be financial enterprise, let it not be a financial enterprise. Okay, understand the difference. Dividends are paid when you issue the shares. Okay, so let it be financial enterprise, let it be non-financial enterprise. If they are issuing the shares in form of equity shares or a preference shares, they are required to pay the dividend, and paying dividend is your financing activity. Let it be your financial enterprise or let it be non-financial enterprise. What will happen if it is a non-financing enterprise? So, as per accounting standard 3, as told earlier, which accounting standard govern cash flow statements? It is accounting standard 3 issued by ICAI. It is considered appropriate that payment of interest, dividend, when I told you, when we pay interest, dividend, they are treated as your financing activity. But when instead of payment, you're receiving the interest, dividend, they are classified as your investing activity. Because when will you receive the interest or when will you receive dividend? When you invest in shares, when you give loan advances to the third party, right? So that is the difference, and it's treated as your peculiar item. Next, taxes on incomes and gains. Taxes, as discussed earlier, one was your income tax, right? Income tax is paid on the profitability of a enterprise. But what will be the taxes on income and gains? See, taxes may be paid on income tax, that is your normal profit. It can also be paid on capital gains. What are the capital gains? They are the capital profit. When you sell the asset, your fixed asset like your land, building, furniture, anything. If you earn profit, you are required to pay taxes in form of capital gain taxes. Dividend taxes. It is nothing but tax on the amount of distributed as dividend to the shareholders. So government charges taxes on dividend as well. So what does it imply? We know income tax which we pay on the operating profit is classified as your operating cash flows. Dividend taxes is tax paid on the dividend, and dividend payment is nothing but your financing activity. So taxes on same will be treated as what? Your financing activity. And lastly, capital gain taxes. When will you earn capital gain? It is by sale of assets like your plant, machinery, fixed assets. So if you earn any kind of capital gain and if you pay taxes on that, also known as capital gain taxes on the sale of fixed asset, it is to be classified as your investing activity. I hope this is very clear. Lastly, your non-cash transaction. What are the non-cash transactions? I'll give you one simple example. I have something like bank loan taken. Okay, I have taken loan from you. Okay, but I don't have money in my hand. Okay, due date has arrived. So what I do is I give you my car. Okay, instead of paying you loan of say worth 1 lakh, since I don't have enough cash in my hand, I gave you my car. Tell me one thing, is there any kind of cash inflow or outflow involved in this transaction? The answer is no. Why? I have not given the cash. What I have given? I have given away my asset in return of liability. So, as per the accounting standard 3, investing and financing activity that do not require use of cash, cash equivalent should be excluded. What you are required to do? You should exclude it while preparing your cash flow statement. Like the example given here. What does it say? Acquisition of machinery by issue of equity shares. What I said, in case it was car. Now I want to purchase a machinery. So for that, instead of paying cash, right? When we purchase machinery, what is the journal entry pass? Machinery account debit to bank account. But what I am doing, instead of paying cash on the purchase of machinery, acquisition is nothing but what your purchases, right? When you say purchase of machinery, you will say, ma'am, it's a cash outflow from investing activity. But if no cash has been paid, instead of that, I gave him equity shares. Okay, same, take the machinery cost is of 1 lakh. Okay, I gave him shares worth 1 lakh or debentures by issue of shares. What does that mean? Redemption of debentures means repayment, right? Redemption is nothing but repayment. As you know, debentures are to be repaid within a specified period of time. If you compare equity shares, there is no such requirement. But when we talk about debentures, they are to be repaid at some point of time. Basically, there is a time limit. So if I want to repay to the debenture holders, right? But if I don't have money, what I will do, I will convert them. What I'm doing, I'm converting those debentures into my shares. Okay, I'm converting those debentures. Instead of making repayment in form of cash, I am giving these debentures what? Shares. So if I'm giving them shares, tell me, is there any kind of cash flow? If I say redemption of debenture, you will say, ma'am, it's a cash outflow from financing activity. But if I'm saying redemption is happening, like I'm repaying the debentures, but there is no money going out of my business, I'm just issuing the shares. You will say issuing of shares is what? Issuing of shares is cash inflow from financing activity. You will see that both are coming together. Financing against financing, inflow of financing against outflow of financing. But there is no cash inflow or outflow. Understand, there is no cash inflow nor there is cash outflow. So, to sum up, assets acquired by issue of shares are not disclosed in the cash flow statement. Why? Due to non-cash nature of the transaction, right? Unless and until there is cash inflow or outflow, there is no requirement to add it in your cash flow statement. Okay.